I teach is going to be appropriate for everyone. For most
Welcome
of
back,
you,
guys.
when you come in,
It's a good morning. This is 12:02 Nigerian local time. So it's probably a good morning. And today, this is the first trading day for February 2024. And I have this statement here that's my usually daily date statement that guide us. Well, I hope it was a nice trading day for you. And if it wasn't, well, all the best. But I want to say something. I have a short term switch in bias right now. Currently, from what I am seeing, because I work with price action and what price action is telling me, that's what I go with. And from what I can see, is market has switch short time bias for me. I don't know if this switch in bias going to lead us to this buy side, or is just going to sweep this buy side to engineer liquidity to go lower. How we close above this particular buy side will indicate how, if it is swept on liquidity or it is continuation in price. But before then, let's dive into what we have today. So, as usual, what you are looking at right now is Euro US dollar, which is what many people call EU. A lot of people refer to it as EU. Well, I call it Euro US dollar daily contract, and it goes like this. The Euro US dollar daily contract for Thursday 1st, which is 1 of February 2024, did not deliver so perfectly as called out yesterday, but did sweep the draw on liquidity we identify on price. Meaning that we did not deliver the way we call it out yesterday, but we indeed swept those liquidity we did mention yesterday in price. And I am very pleased to see Euro. I'm very pleased to see Euro price lower, sweeping the previous day low, sell side liquidity, and the relative equals to engineer for higher prices on Euro, and also tapping on the daily ICT bullish order block. Now we have the daily ICT bullish order block, this particular area, and for this area being on a deep discount, 78% region. If you measure from here to here, this is the 78% region, and this area is at deep discount. We price into it again, swept the relative equal load that was created, and immediately we ran up impulsive. Now, with the price delivery on Euro today, this indicate a short time or long time reversal for buy side delivery. We can see how price is trading at the daily ICT order block. So I have a short term or long term change in draw on my liquidity, which is now equals to what? Buy side delivery. Now, there's something I want to add. We see that price, we see how we traded into this bullish order block. If at all we are going below this area, this shouldn't have been so, you know, so pressure price shouldn't have been so pressured around this area. We the way we price here, it is not impulsive. And if price is really willing to go, it's supposed to be impulsive. Just like I told you guys yesterday, my previous video, I did mention that if this area is going to be swept, I want to see today price really swept, deliver impulsively. And you know what? We deliver impulsive, but we did not deliver in that direction. That is why I said it did not play out how we intended it to play out. Rather, we deliver impulsively higher, and how we close, how today candle close really shows a lot. We deliver at the peak. We close the market close almost at the peak. So, and looking at the daily, we don't have any reason to expect price to come back or have a deep retracement. If we are interested in this buy side or this buy side, then there is no really in need for price to come lower. Then we're supposed to be seeing a sharp delivery higher. Plus, tomorrow is Friday, which is the end of the week. So we should not expect too much volatility. Rather, but we favor buy side rather than sell side on the daily. So that is it for the euro dollar daily contract. So let's go to the dollar index, which is the XY daily contract. Also, on the dollar index, we see that since we get above this bearish order block, which is the daily bearish order block, we week in, week out, week in, week out. And on the euro, we did create a a lower low, but on the dollar, we did not create a significant lower, higher high. So that's why I indicate it as SMT. That's what I mean by smart money divergence. And how we close today, you can see how price code today closed today. We closed so bearish, and this is indicating that we coming below this area. And after this, we have this. This volume imbalance has already been used. So what do you expect? I'm not expecting for price to stay long here. And tomorrow is Friday, so we might not see a high volatility. But if it did give us, then we're going to make use of it. And that is my new shift in bias. So in this year, I've switched bias 3 times because I'm counting it. This is the third time, and I invertly shift bias into my first bias because your bias can either be bullish or bearish. So I am now bearish on the XY. I'm bullish on the on the euro. So yeah, I tend to just change bias because I'm dealing with what the price is showing me, not what I think. Because what is clearly showing right now is we have short term bearishness on the dollar, and today actually shows that. I don't know, maybe we might get here and start going higher again. That is it. But let's see what price give us. And I'm going to see how much time I change my bias before the end of this year. So it's amazing though. So I hope you are ready to ride on this journey with me. And it's kind of interesting to me as well. So let's go to the 4 hourly contract on euro dollar in compare and contrast. So this is the 4 hourly contract on euro dollar. Then I have this statement here. The Euro US dollar 4 hourly contract showed nicely how Euro is delivered in today trading. So on the 4 hour, we can see that Euro did sweep lower and take out the relative equal lows and tap on the daily ICT bullish order block before pricing higher. Now, on the 4 hour, we can see that we really do not have much PDRs to use as a buy template, except the 4 hour inversion fair value gap, which price might not straight to trade back into. So meaning that one of the things we work with after we have our bias is either we are bullish or bearish on our bias. So if your bias is bullish, you want to be looking at lower time frame PDRs that support your bullish bias. So for the fact that we really do not have the 4 hourly PDRA except for this, because although we did have this fair value gap here, which is so big, and I'm anticipating that during London session we might price below and tap, tap on this void and leave some gap on field, which is we might create an what is it called, breakaway gap tomorrow or next week. So this is basically it, and that is that's it. So casting forward, we expect to be a buyer tomorrow if price is trading below the New York opening price during the London session, and also a short-term swing low taken. You all know what I'm trying to say. That if we created a short-term low during the midnight session, then I want to see that sweep, and it will lead us to price into this area. And if price is trading below the New York opening price, yes, the New York opening price, then I want to be a buyer at that London session. So our draw on liquidity is equals to buy side delivery plus equal high plus swing highs. Now, meaning that our draw on liquidity right now is this buy side delivery, which is all the candle highs. Then we have this equal high, this high, and this buy side liquidity that's high. And I'm not sure if we are going to take this tomorrow, but anyway, let's just work with the information we have currently. So that is it. Let's go to the dollar index and see what we can say about that. So this is the 4 hourly contract on DXY, and right now we can see we have so much kind of a lot of big volume here, and I don't see, or I don't have any reason if we have to fill up the void. But if price has to come back all this way, well, that means we are still ranging and it's not willing to leave this range, because obviously this is a range, and since from 15 last month, almost half of the month has been on a particular range, and it's just kind of so amazing how I will be trading within this range, up and down, up and down, up and down, and not have so much losses. That's why you should appreciate yourself. Like, I've been on this range, like we are not in actually in a particular direction, just in one range, up and down. And I did not have a blown account. I am still making money. I like like no, I've not experienced this, to be sincere. All right. Although I don't risk more than I can lose, like I have my risk management very well, which is something I would like to talk about one day. But it's just kind of amazing to me, because when I sit down and I actually tell myself the truth, sometimes sit down and tell yourself the truth. How can you be on such little range? You don't have a blown account. You just trading up and down, up and down. You don't even know if actually it is going to leave that range, but you are just working with what the market is telling you. Because tomorrow there is an instance, the market make, or tomorrow we might just see price get into this 4 hourly fair value gap and range back and clear this sweet liquidity here. So, but which of these make more sense? Now, when I'm working with buyers, I'm working logically. What makes more sense? Now, on the daily, it makes more sense to see price go below this low and this low. Now, if we open and during the morning session, which is the London session, we already go below this 4 hour fair value gap. I'm going to use this one as an inversion fair value gap to sell, to be a seller, right? So if you want to sell the XY, to be a seller. Now, if we traded below this area, then we come back into it. Then, if I'm being a seller here, then I should be confident to be a buyer on the euro. That is just what I use this to do. Well, that's basically what everything I had to tell you on this 4 hourly contract. So let's go to the dollar index, the euro hourly contract. So this is the euro dollar hourly contract, and as we can see, we did deliver. You see this equal lows that I was mentioning. We did take that lows, then uh um we take it during the London session, then we price higher. New York session reverse, which is optimum trade entry. That is what we are told during OTE. New York session is always an OTE. If there's OTE in the instance that if we are bullish on the London session and the New York session is not being a reversal, then there is a probability. You just all you have to do when you come, you use your fib, mention the high, from the low, or just mention that swing instant, the range that was created in the London, mention it and take 50% of it. If you are being a buyer, buy at 50% below. Then if you are being a seller, sell at the premium. That is OTE for you. I'm just explaining something that you can make money with very, very, very well. But some of you would not get it. But you don't use OTE all the time. You are like in this instance, because sometimes the New York might the London might be a buyer and the New York might be a reverser. That is, it might reverse against the London. So there are instances where you can make use of these parameters, but all you just know is just have that information at the back of your hand, because you will know when to use that. You will also know when not to use that. For instance, same thing happened here. The London session, New York came to buy it at 50%. We've been a buyer. Then if you try that same thing here, this is London, but we have already swept liquidity. Now, let me not go deep. Let's just explain something here. Now, the Euro US dollar hourly contract shows nicely the intraday algorithmic price delivery for Euro USD. On the hourly contract, we can clearly see that Euro priced lower in the early hour of trading and swept the equal lows which I just mentioned, and priced into the what daily ICT order block before distributing higher. Yes. Now, the daily profile is an obvious 3 o'clock AM New York local time as the low of the day. That means the low of the day is formed today during the New York local time that swept those equal low and engineer higher price delivery. Now, the high of the day is formed at 12 o'clock PM New York local time that end the delivery of higher prices. Now, casting forward, we can use the hourly inversion fair value gap as a PDRA to support the buyers going in tomorrow. Now note, tomorrow is Friday and the end of the week, so expect less and engage less. That's a precaution. So we I'm looking towards that. If price did give us opportunity here, if we did not take this equal high before the London session, then I'll be interested in being a buyer. But if we sweep this high before the London session tomorrow, I'm not engaging either a seller or a buyer. I'll be waiting for the New York and to see if the New York will be a continuation or a reversal. If it's going to be a continuation, I will use what I just explained here. If it's going to be a reversal, I will wait to see a short-term liquidity sweep, then sell the market lower. That is just basically the ideas going in tomorrow. And if it does not give me any of these, then I'm not engaging in the market. Now, this is the hourly contract for DXY. We can also see how we actually did deliver so impulsive, so aggressively lower. So we tap on that 4 hour fair value gap now, and we are trading here. So we have this void to look out for, and I don't see any reasonable inversion fair value gap here to even call out. So I'm just going to work with how the market is engineering liquidity tomorrow. If it did not give me any clear view, I will not buy, I will not sell. That means there's no trade for me tomorrow. That is just it. I will not trade, because there's always going to be an opportunity next week, next month. If it not give me next week, there's next month. There's not normal month. So thank you guys. And please, if you like this video, do share with your friends and families, and subscribe to this channel. Please do subscribe to this channel and like my videos. Thank you. God bless.